Hey guys, welcome back. In today's video, we are talking about the 15 billion synthetic AMC shares, how shorts can't stop the squeeze, $998 per share, and many more in this video. First, we're taking a look at this. Want to know how bad short sellers have distorted AMC? Let's put two bits of undelivered evidence together. For every one real authorized AMC share, short sellers have created at least 35 fake shares. So if you take a look at the data here, what we have at first is the Morningstar report of the ETF with 14.949 billion shares of AMC. And then we also had a recent equity swaps on AMC that we talked about, the total return swaps, where we saw about an increase of 313.8 million AMC shares. Now, given that of what's going on, when you add it all together, you can see 15.213 billion shares divided by 433 million official flow equals 35.14. So this means that for every one official AMC share in the flow, there are at least 35 obligations or synthetic shares that have been promised. And so this is what we're looking at. And you can already imagine with this amount of synthetic shares that they're overextended beyond, a recall of these shares will force a delivery crisis, triggering a massive short squeeze event. And so we have always talked about how many synthetic shares there are, and we've always seen different data. But from this alone, what it shows is that there are at least, and once again, I'm emphasizing on the word at least here, is that 15 billion shares of AMC that exist out there. And this kind of goes back to what we talked about with the dilution of AMC as well. A lot of people are worried about the dilution of AMC, the issuing of new shares, the authorization of new shares, because they are worried that these shares are allowing the short sellers to get out of their positions. But then the question we have to ask is, if there are at least 15 billion shares that exist out there, even if AMC were to issue out the full 550 million shares, that is not going to solve anything for these short sellers, because that isn't even going to get rid of a billion. That's only going to get rid of 550 million. And so there is still 14.5 billion synthetic shares at least that still exist out there. And so you can understand why we've said that these dilutions are not actually helping the shorts to allow them to get out, but rather how powerful, we are going to be and how much pressure we are applying to these short sellers. Another thing is to understand is AMC is far under $5, yet institutions are buying it at rapid speed. They know a big event is coming and maybe that they are going to cause it. Shorts will not be shown any mercy. And so, like we've said, one of the biggest things we talked about recently is about how institutions have increased their accumulation in AMC. We've seen how the demand for AMC shares have been at a very, very high amount. And so one of the things that we talked about is potentially these institutions are expecting something to happen. And so going back to what we started with is the fact that if there are at least 15 billion shares that exist out there, and we are in a time where there are a liquidity crisis, where the recall of shares can happen anytime, where the forced margin calls can happen at any times, it's no surprise that these institutions are expecting massive movements for AMC, especially the fact they know that some of these short sellers aren't going to survive anymore. And you have to realize, trust the process. So after all these time, the criminal short funds and market makers haven't found an answer to this. Buy and hold is the tush push of the market. Can't stop it. Now, once again, none of this is a financial advisor. Do take what I say grain of salt. Obviously, make sure you do your own due diligence and research. But one thing I do agree with is the fact that short sellers have not found a way to actually get rid of this situation. Yes, they found methods and strategies in which they can delay this whole thing. They can manipulate and suppress the price. But it doesn't change it from the fundamental factor, which is the fact that they are still trapped with these shares. And if anything, the one answer they found is to actually buy AMC shares. So the very short sellers who have created billions of synthetic shares, who have paid media articles to bash AMC, are buying AMC shares. And that's the answer they found out. What we've known is that they can't buy enough shares to obviously protect themselves from the amount of synthetics that they have created. Another big thing is that recently we're seeing Charles talk about AMC again, in which he mentioned about how he put 50k in AMC, 50k in GME. And once again, it's just talking about how we still have people constantly fighting for us, and we're still having these effects that's on the media. Now, once again, like we said, the majority of the media articles is going to be helping out these institutions, but we apes have the ability to obviously share everything, wherever it's on Twitter, wherever it's on YouTube, wherever it's on Reddit, or anywhere else. And so that's the ability that we have. And it wouldn't go be far to say is that we have already made sure that a lot of apes within the community has obviously seen what's been happening, know some of the manipulation that's going on, and realized everything that we have, of course, said. Another thing, and this is why we talked about with how AMC share price could easily go into the thousands, if not tens of thousands. And the reason why I say that is because last month's drop in Bitcoin market cap corresponds to $998 per AMC share. So you'll be familiar with these kind of posts. What we talk about is how a drop in different industries, in different stock, corresponds to the price per share for AMC. Now, the reason why we do this isn't any random factor, but it's because we've known that in the past, they have been showing how they've used wherever it's Bitcoin, wherever it's crypto as a whole, or other stocks like Nvidia as collaterals to suppress AMC. And so when we do see that these value in these collaterals are disappearing, bear in mind is that this could easily be transferred towards the AMC value as well, because that's originally what they used to suppress AMC. So you can see that the drop in Bitcoin corresponds to 998, but it obviously doesn't stop there. We're seeing how Nvidia is dropping, we're seeing how tech stocks are dropping, and so all of that also corresponds to AMC as well. Maybe not 100%, but at least a big majority, and the same applies for GME as well. And so this is why we said it is very, very simple for AMC to easily go into the thousands, if not tens of thousands, and even the hundreds of thousands, because of how much value that is truly out there that they've used as collaterals to suppress AMC. Take a look at the market cap of Nvidia, take a look at the market cap of any of these trillion-dollar companies, the same with Bitcoin as well, and you will realize that there is so much value that they've used over these years to obviously suppress AMC, not to mention the 2.55 trillion reverse repo that we'll also talk about as well. But another thing to realize is that we have to understand, even $3,000, even $1,000, that is still nothing compared to where we were. Remember the AMC stock now versus pre-split. $1,000 is only $100. And so you have to understand why we've said we could easily go to that and bigger and beyond. And so this is why we're seeing how, once again, the shorts don't have an answer to this, hence why they're buying. The fact that people, all these institutions are buying it at an increasing rate should all explain to you, obviously, what's happening. Furthermore, you can see one of the things that we've been mentioning recently is the investments that AMC has made. Now, this is of course in Hycroft, and you can see depending on how the gearing is on the Hycroft warrants AMC owns, between those and the shares, AMC is up 20 to 25 million this quarter. The gains were showing AMC earnings for Q4 and contribute to further improvement. So from here, you can already see how well AMC's improvement is doing. And once again, this is why we've said if AMC were to able to raise more money, they will definitely be making even more investments and increase on their existing investments, which will give them an even bigger return. Is why I'm extremely happy and confident that if AMC were to raise cash, they will put it into good use. So one thing to note about this is obviously this investment is directly related to Hycroft, because as we see Hycroft's price goes up, we're going to be seeing AMC's investment go up as well. And so what we have to understand from here is Hycroft's price, Hycroft's performance can either positively impact or negatively impact AMC's earnings, AMC's Q4 earnings, because of how it will do to their investments. And so in times like this, when everyone knows that Hycroft is related to AMC, you're seeing these, where Wall Street published a general article about Hycroft mining. The article's conclusion: HYMC sentiment is overly optimistic, diluted shareholders, and the share price is overinflated. The conclusion are based on inaccurate information. Don't be fooled. Now, I'll let you guys obviously read it wherever you want to pause the video, or wherever you want to go check it out. It's from Biotech Moves. But you can see the correlation of why these articles are coming out previously, and we've seen what's happening within the commodities and metals market. We've seen what's happened to gold, we've seen what's happened to silver. So for the very fact for Hycroft to go up is no surprise. And we've seen how prior to Hycroft having a positive effect to AMC, there were no articles like this made. But the very fact that we're seeing how this can positively affect AMC, we're suddenly seeing these articles where it's saying Hycroft is overvalued, with, again, coming down to the one incentive for Hycroft investor to sell, and that is to then lead Hycroft's price to obviously drop. And you can see how this chains onto one another. Getting people to sell Hycroft will cause Hycroft's price to drop. Hycroft price dropping will mean that AMC's investment will be dropping, and AMC could potentially then go from a positive 25 million gain to a negative gain, which would then reflect on the Q4 earnings, which then will show that AMC has bad earnings. And so you can see how all of this is just linked to AMC. And so these are the articles that we're looking at, and once we've realized this, we understand how well AMC is doing. We understand how these investments are putting AMC in a better position. Now, more about synthetics, but this time on a different stock, but it's still relevant and important to us, is this. Hedge's naked shorties doubled down yesterday and sold millions of fake GNS shares into the market because GNS has an ATM in place. And then brokers fraudulently use these potential future shares as a real locate to sell them, even though these shares don't yet and may never exist. Now, the thing that's interesting about this is this could also be the same for AMC as well. Now, this doesn't mean that it's AMC helping out the short sellers, but rather it's just for these shorts to exploit another way that normally shouldn't be allowed to suppress the price of a stock. And we'll talk about why this isn't firms helping the institutions, but institutions doing this in brute force and just illegally manipulating the market. Because if you take a look at what Roger has said, the CEO of Genius Group, is that don't fall for their misinformation and lies. We have had zero changes to the use of our ATM, and they've had it approved for many months, so there's zero logic to why this has suddenly happened. You can see yesterday, 72 million shares, equivalent to more than our entire tradable float, was sold. What happened here will become very clear when we present the data. We have tracked every trade since December 2022. We tracked yesterday, we'll track today, and every day going forward. And so this is what we talked about. The fact that they are able to use potential future shares as a current locate and actually be able to take a loan out right now already on these shares and then use it to then short Genius Group is already ridiculous. Then think about what they're doing with AMC. And this is why we've said, yes, this is something that potentially they could also be doing for the AMC when there is the authorization, when there is the issuance. Now, is that a bad thing for AMC? Well, yes, because it means that there is an increase in the shares for these guys to then short AMC. But when you understand the fact that already we talked about, there are already 15 billion shares that are out there. So is that really going to be something that's major? No. And like we've said, even if AMC were to give out all 550 million shares for short sellers to cover their shorts, there is still another 14 billion synthetic shares that exist out there. So I myself, I'm not worried. And in fact, I'm looking forward to how AMC is obviously able to then use that money. And then we can see the desperation from the short sellers. And it's why I'm very excited to see how this lawsuit is going to go, because if it is going to go well and AMC decides to take the same route, we're going to be seeing something massive. You can see after the lawsuit is happening, the borrowing fee is now higher than what it was when there were zero shares available to borrow. Where do all the shares available come from? The naked shorts that were sold to lenders yesterday are now in their accounts available to borrow today. But then this goes back to what we're saying as well, obviously, that the fact that they use future ATM shares as a way of locating. And now even this, despite the fact that Virtue Financial has been sued for alleged naked shorting on Genius Group, you can see that they are still trading Genius Group. And so this is what we've said, there is no shame from these institutions. They will continuously suppress a stock, they'll continuously manipulate a stock for their own benefit. And so it is why I urge everyone to obviously support this movement. I want to see this lawsuit get somewhere. I want to see the fact that regulations will be forced to take action, not just turn a blind eye towards these institutions, because these institutions have taken away so much value from good companies, have taken so much money from the retail because of the fact that they are able to abuse these tactics that is not only not accessible by the retail, but also extremely unethical and at some cases illegal to use. And the only consequences they face after making hundreds, if not billions of dollars with these tactics is $1 million, $2 million fine. And so, this is why I want this lawsuit to obviously get somewhere. We can see every broker that has been selling the public AMC or GME shares that have not been located first, placing IOU credits in customer accounts while failing to deliver on the back end, a rude awakening is coming, because this, once again, this lawsuit that Genius Group is doing is not only attacking the institutions who have been naked shorting, but it's also the brokers who have been helping this movement as well. And so this is why we said we could be seeing some major things happening. Now, one of the big things we talked about is, of course, the illiquidity issues within the market. Now, yesterday, we already see how banks need to tap the Fed for liquidity also in the afternoon. And we talked about how this is just showing the desperation that's in the market with the repo. Today, when you take a look at the reverse repo, we're looking at 0.9 billion. So this is now the first time where it's below $1 billion in a very, very long time. We saw it go all the way up to 2.55 trillion that they used to short and suppress AMC, and now it's at $900 million. It's finally below the $1 billion mark. And so what we said about this already is that firstly, as we see this number go down, we know that already there's a lower capital for these shorts to borrow. We're seeing this dissipate. But the moment this touches zero, the moment there are no more liquidity in the market for these institutions to borrow, that's when you're going to see people panic. Now, it's no surprise that we're looking at the market dropping recently. The reason why we say that is because they don't have these capital anymore. They don't have these loans that they can take out anymore to then pump up these stocks. And so in times like this, to protect themselves, to free themselves of allocations of capital, because they see the reverse repo going down, they're selling. And hence why we're seeing the price of all of these stocks to go down. And one thing that's another peculiar thing that's happening is Citadel Advisors sold 4.8 million GME shares in the latest 13F. And the reason why I find this interesting is because of what we talked about with how we're looking at Citadel increasing their AMC shares, we're looking at UBS increasing their AMC shares, but we're looking at these two then do the opposite for GME. But what we've also seen is how they've bought ETFs of GME. And so if you guys have any idea what's obviously going on, feel free to comment down below. But we do suspect that obviously something's going on, because the fact that there is 550 million notional value of fails to delivers on XRT, an ETF that contains AMC and GME, over the same time span where GME was down 20%, this should show something. And so this is why we've said that the shorts are trying to prepare themselves for something, but because of the lack of liquidity, they're failing to do so, or at least they're struggling. As always, none of this is ever financial advice, so do take our grain of salt. Make sure you do your own due diligence and research, and I'll catch you guys next time.